Alright guys, welcome to the Amazon Butterfly session. If you guys pay attention to the premium on Amazon, you know the premium is extremely expensive right now, but then at the same time, many people want to play Amazon. So what's the best way of playing, or a way to play where we don't have to pay a lot of money and something with a huge potential, right? And one of that strategy is the butterfly strategy, right? Right here, the butterfly strategy. Now with this, we can basically play high premium on Amazon for a very low cost, right? And so number one, Amazon right now is trading near 3,700. When I bought in, I think it was near 3,720 or something. And I was looking to add a weekly position, but then I saw that the premium is a little too expensive, right? Why am I gonna pay $15, $20 for a call, 100 points out of the money, you know? So I came up with a strategy butterfly. I'm like, you know what, let me try this. And I picked my strikes. So basically in this, what happened was, for the week, there's a weekly chart that I have open, and if we go on the daily chart, I said to myself, by the end of the week, Amazon can probably close between 38.50 to 39.50. How I got to these levels, I'll explain later. But for now, I chose a 100-point range that maybe Amazon can close between these levels in the coming days. So far, not looking so good. It's below 3,700. I do want to see it back above 3,725. But the strikes which I chose were 38.50 was my first strike, 3,900 was the second, and 39.50 was the third. So the 38.50 calls, when I bought this 100-point range, the 38.50s were going for $11.28. The 3900s were going for $7.47, and this was going for $5.46. Okay, so in a butterfly, when we play the range, just give me 1 second, guys. The first strike we buy, we sell the second, and then we buy the third. Here we sell 2 contracts, right? We sell 2, we buy 1. And then the third strike also we buy 1. Now the reason we sell 2 contracts here is, let's say tomorrow if Amazon closes at 4,400, just for an example, some news come out, split news come out, they buy out something, like some crazy news come out. Now the $3,900 calls which you sold, you would have to buy them back at a very high price, even though you have 138.50 for protection, right? But then you still have 13900 left. So you buy the 39.50. Right, there's a difference. The strikes difference in buy 1 and the second strike is always the same. Then this call protects you against it. Okay, so then your butterfly is just basically 0. Your risk is defined. Now here, what exactly happened? What I did was, so instead of paying 11.28 for 1 contract, so I bought 1. So let's look at the total cost, 11.28. This I sold 2 contracts, so 740. So this equals 747 times 2, right? This equals this, and then this right here. So what's our total cost here, right? Because we sold this. The total cost here, if I just add all these up, and then we'll look at the max profit and loss. So my total cost for this butterfly was $1.80, okay, which is equivalent to 180 bucks, okay? Now, the first thing that we want to look in butterflies is, what's the max profit, okay? What's the max profits here? So we take our middle strike, right? We take the middle strike for the max profits. And then we take either strike, usually the first one, right? So you can get a mid, and then this equals 3,900 minus 38.50. So $50 is our max profit, right? Percentage wise, this would be 50 minus 180, and then whatever percentage that gives us, okay? Now, instead of playing the high premium, now if you have a $10,000 cash account, let's say this butterfly goes to 0. From $1.80, it goes to 0 from 10K cash. Okay, I'm just gonna go over some scenarios just so you guys can understand the power of numbers. So let's say we put $180 into the butterfly, okay? This is our cash balance. And this is our trade money. It's not an investment, it's just a trade, because trade can go to 0. Investment, there's always value held. So 10,000 minus 80, our cash balance remaining is this. So you have 98.20 remaining. Now let's say Amazon, it does what it's supposed to. We're right on the strikes. It makes a 100-point move. As the stock goes up, even if Amazon was to go to 3,800 or even 3,760, if Amazon moved up 30 points, these butterflies will be in profit. They would probably go to 260 or maybe around $3, just an example. All right, this call may be trading at 20 bucks, which is a 100% move, but this also gives you a great percentage move on a smaller amount, because to play Amazon, not every account can play unless you know strategies. Okay, and so on 180 bucks, let's say tomorrow if Amazon closes between this entire range, there's a 100-point range. Somebody actually my data is delayed for you guys 1-2 minutes, so I can't really ask you live questions because the answers will be late. But let's say if Amazon was to close at, just an example, 38.70 for example, right? Let's say the closing price was 38.70. How do we calculate our profits here? Okay, so number one, we have the 38.50 strike, 3,900, and you can close these at any time when Amazon's running. You don't have to wait until Friday, but if you hold until Friday, you get the most profits. Okay, the first thing we need to calculate here is the intrinsic value if the closing price is 38.70. Okay, so how do we calculate that? How much is 38.50 worth? It's 38.70 minus 38.50. The intrinsic value here is 20. The intrinsic value 3,900 is 0 because it's too far out of the money. 3,950 is also 0. Okay, and this leaves us with $20 worth our option butterflies. So from 180, you took the options to 20 bucks, which is $2,000 per contract. And you guys have seen, if you've been in here for long enough, you have seen that for many months or many, almost 1 year now, how many butterflies we nailed, which were over 500%, 1,000%. Today alone, we just closed I just closed my HD for 150%, right? And the funny thing with HD is the strikes that I had, all my strikes lost value, all of them. Okay, but the middle strike, which we sold, the 330, that gave us the most profits by selling the 330 calls. Okay, so 20 to 2,000 bucks, that's almost 1,000% profits on this. So you buy one leg on butterfly. The first thing that you need to understand, I'm just going from a very beginner's perspective right now. You buy one strike, you sell the middle two, and then you buy the third strike. What strikes you choose, that's completely up to you. You can always work on some technicals and see where it closes. The reason I chose this strike, because I do believe Amazon gives us 3,800 plus today. Sorry, this week. Tomorrow we do have the CPI numbers. Let's see how the market reacts to them. And if Amazon gets above 3,800 for the week on Friday, I think Amazon is going to close between somewhere in this range, 100-point range. If I hold my butterflies until Friday end, Amazon's trading below 38.50 or 39.50 near close, then my butterflies will be worth less. However, if Amazon's, let's say, trading at, forget this range, on Friday, even if Amazon's at 38.30-ish, if it's trading at 38.30, these butterflies will be worth around $8, $9. Still up 400%. Even though the price of these calls, so let's say if Amazon was at 38.30, just so that you guys know these things. If Amazon was trading at 38.30 on Friday, okay? So if it was trading 38.30 on Friday, in the daytime, in the morning, the 38.50 calls will probably be worth, depending on the premium, around, I don't know, let's just say 10 bucks. These calls might not be worth much, maybe $1.50, right? And this will be close to zero. This will actually be worth less than $1.50. Now, you can still bank 300 to 400% on these butterflies on Friday, even though Amazon is trading at 38.30 in the morning. Why? Because there's premium added in the 38.50 calls is near the money. Okay, so let's just calculate these strikes quickly. So 38.50, 3,900, 39.50. So 38.50 is trading at 10. This is trading at $1.50, so we times it 2 because we gotta buy it back 3, and then this is just close to 0. Your profits are still 10 minus 3, 7, right? So from 180 to 7 bucks, you're still up almost more than 200%, close to 300. All right, and you can also play butterflies in the further strikes. This I played for this week just to be, I took a little risk. I'm pretty sure it makes a move this week. Something I do see it running up, and if it does, this will be a huge potential play. And let's say if this does not work, if you have a 10K cash account, this doesn't work, it's okay. Maybe on the next one you're consistent, you do another butterfly for 180 bucks. Let's say that also doesn't work. Right? Let's see your cash balance, right? So that also doesn't work. Now you're at 96.40, right? And these were good trades. This was a great trade. You picked a great trade. You have good reasoning behind it. This is also a great trade. It was not a forced trade. But 96.40, let's say you do another trade at 180. And this one, you end up banking the range. And if you bank the range, and if you're giving yourself 100 points, range in this, and you bank that range, even if you're 20 points near your range, at 20 points, and you're selling this at 20 bucks, right? If you're selling this at 20, that's 2,000 bucks, okay? Your balance goes from 96.40 plus 2,000. And this is how options work. Now you're up a lot on your account. So when trading options, you don't need to trade big money, right? You just have to pick great trades that have a huge potential. And this is one of them. So in butterflies, you can make as much as you want, and this gives you leverage to maybe miss the next 3-4 trades and then bank one. So out of every 4 butterflies you do, even if you, and our ratio in my stock club is really high, we end up hitting like more than 3 out of 5 for multi-baggers, okay? The only thing here is being consistent, being patient with your trades, and knowing when to play them. Sometimes you guys end up gambling your money, you just want to trade every day. Like today is not one of those days where I'm trading, I'm just watching the market. We gave you heads up in the morning that this might happen, and that's exactly what's happening, right? There's nothing to trade today, not much. If you caught Tesla, great. If you didn't, everything else is just going up and down, right? So learn to work with your numbers, manage your numbers, that's one thing. So butterflies, guys, is basically simple. You're basically choosing a range that you want to play. You could have chosen closer strike. If you think it closes at 37.50, you could choose something like 37.30, 37.50, and then 37.70, obviously, and whatever this comes out to. And because this is near the money, this might cost you a little bit, but at the same time, the spread is low, so your cost should be less than $2 on these, I think, or $2.50 or $2 max. Right? And if I see Amazon making a base here, another thing that I could do, I could buy back the 3900s for really cheap and hold this 38.50 calls alone, and I can sell the 39.50s. So for a cheaper premium. That's also another way of doing butterflies. Okay, when you want to sell other calls against your calls, and then if you think a dip comes, you can buy back the calls which you sold. All right. So that was my reasoning behind Amazon. Just a lotto trade, nothing else. It was nothing for a lotto, not in a full size. So if it works and I think it runs, this can have a huge potential. And I'm looking for at least 500% of these butterflies if it works out. And if it does, we'll do another session on Friday, and then we'll go over how these strikes the price affected. Okay. And so I hope that helped you guys. That was a quick session. I am getting some alerts on my phone which I need to take care of for my positions, and I'll see you guys back in the chat. Hopefully that helped.